Have you ever wondered how to include your personal expenses as a business expense? It is a common question we get from entrepreneurs every year. I get it. We want to maximize our business expenses and tax deductions, but we want to do it safely without the IRS scrutiny, right? Welcome to Business by the Books, the podcast that teaches you how to use your financials to manage your business. My name is Danielle Hayden, CPA and founder of Kickstart Accounting Inc. And I've helped thousands of entrepreneurs make informed financial decisions for over a decade. Today, we're diving into a tax strategy called an accountable plan. And in this episode, you can look forward to learning how to use an accountable plan to maximize your tax strategy and business expenses, who is eligible for an accountable plan, and as always, all of the details you need to implement the accountable plan. I promise you will leave with homework and action steps to implement this immediately. All right, first and foremost, we need to lay the foundations. We have to separate our business and personal finances in order for us to implement any of these strategies. So go back and listen to episode 143 that we did on why not to commingle your business and personal expenses, because you cannot effectively implement an accountable plan without completely separating business from personal. No matter if you're an LLC or an S Corp, we have to have that foundation laid and sticking to it on a regular basis. Step 2 in this process is to determine your entity type. Now, unfortunately, LLCs are not eligible for an accountable plan. Accountable plans are used for S corporations. If you are a sole proprietor or an LLC, you can transfer money from your business to your personal account for the business use of personal expenses. And then you will take that tax deduction on your personal return. So you can take as many transfers or draws from your business account to your personal account for any of those expenses. But just know that these expenses will actually be a deduction on your personal return. Now, please, as a business owner, I want you to be working with a CPA and have someone else preparing your return. As CPAs, we know which forms these types of expenses need to be included on. This is not your expertise. I went to school for a really long time, and it is important that you are staying in your zone of genius as a business owner and use the resources and the team members around you to help you in your business. Now, as corporations, you get to take these reimbursements through an accountable plan. So the definition of an accountable plan is very simple. It is actually just a reimbursement plan for personal expenses that have a business purpose. So if you're not sure if becoming an S Corp is the right strategy for you, you can go back and listen to the podcast episode 115. So go back, listen to podcast episode 115, where we broke down all the pros and cons of becoming an S Corp. If you have decided to become an S Corp this year, or you are already an S Corp, you can implement the accountable plan as a strategy. This is one of the benefits of being an S Corp. So what is the process for implementing an accountable plan? Step 1, we're going to create a written policy or plan. Step 2, we're going to save the document with your corporate records. This form is not submitted to the IRS or to your CPA. You're saving this document with your corporate records. Step 3, we're going to create a plan to regularly submit your receipts, your records for reimbursement to your business. Now, why do we want to do this? The accountable plan allows us as business owners to take business expenses, which is going to lower our tax liability. By adding business expenses to our business, we are going to reduce our net income and therefore pay less in taxes because we're reducing our net income. We're also then going to be able to move cash money, dollars, from our business checking account to our personal account without paying payroll tax or owner's draws as an S Corp. It is an opportunity to capture anything that you accidentally put on your personal credit cards or through your personal checking account, or to capture any of those personal assets that your business has the advantage of using. Your business doesn't get to use them for free. All right, so what are the requirements of an accountable plan? Every single expense must have a business purpose. We cannot throw personal expenses into an accountable plan. Every single expense must have a business purpose. We have to have a receipt or way of proving it to the IRS if we're audited. So we want to have a method to be able to submit these receipts to the business. It's really important that we are not paying anything in excess over the amount of expenses that we are being reimbursed for. And I'll tell you why. And then we need to reimburse ourselves on a regular basis. Now, overall, if it's a business expense, pay for it through the business. We want to avoid commingling as much as possible. However, if you accidentally put something on your personal card that was a business expense, you can reimburse yourself through the accountable plan. Now, I'm going to give an example of this desk. So let's say I went and bought this desk. I clearly use it as part of my home office. You guys see me in every single one of my videos in this location. So I buy a new desk and it's $500. I cannot pay myself a reimbursement of $700 for my desk. I have to submit the receipt. I have to prove that this desk was purchased for $500. I have to prove its business purpose, but I can only reimburse myself the $500 that I paid for it. If I reimburse myself $700, then $500 would be a business expense. It is an office expense. It is office supplies. And the other $200 would be considered a owner's draw. So you cannot take excess payment as a reimbursement. It really has to be considered a draw. And this is so important as an S Corp because you have to pay yourself a reasonable salary and you should not be taking any draws from your business until you've paid yourself a reasonable compensation. We'll get back to the show in 1 second, but real quick, are you an entrepreneur or business owner struggling with the complexity of tax deductions and salary structures for yourself? It's common to feel lost in the maze of tax regulations and unsure about how to effectively pay yourself from your business. Navigating these challenges can be daunting, leaving you with more questions than answers. But what if there's a way to simplify this process, ensuring you maximize your deductions and set up the most beneficial compensation strategy for yourself? That's exactly what our guide on the top tax deductions for every business owner and how to pay yourself as a business owner are for. These resources are designed to demystify the essentials, helping you understand and leverage tax deductions and outline a clear, effective strategy for your salary as a business owner. Through these guides, you'll learn the key deductions you shouldn't miss, strategies for tax-efficient salary and owner's draws, and much more, ensuring you're financially optimized and compliant. So if you're ready to take control of your financial health with confidence, head over to kickstartaccountinginc.com/gift or click the link in the show notes and download your free resources today. Okay, back to the show. As an S Corp, you will always pay yourself first through payroll, paying yourself a reasonable compensation. Second, through reimbursements of the accountable plan. And then lastly, as a draw. So the accountable plan really allows you as a business owner to take more cash home without affecting your tax basis. So what are the other types of expenses that can be included in an accountable plan? There are the home office expenses. Now go back and listen to episode 155, where we covered all of the information that you need to know about home office deductions. You could also take vehicle expenses. Last week, we covered vehicle expenses in detail. So go back and listen to the vehicle expense episode. Your cell phone and other shared expenses. I like to elaborate on the cell phone because this is one thing we hear from clients all the time. I pay for my kids and my spouse and it's a full family plan, so I don't want to pay for those expenses through the business. And I love hearing that because you really shouldn't be doing that. You can pay for those expenses through your personal checking account, and then your business will reimburse you personally for the business use of your cell phone. Remember, you can only expense the business purpose, the business percent usage of everything, your home office, your vehicle expenses, your cell phone, they have to have business purpose, and you can only reimburse yourself for the percent of business use. I want every single one of you to take what you deserve. Do not ignore these important small tax deductions just because they feel overwhelming or you don't feel big enough. I promise you, if you are an S Corp, you are big enough. I want you to create this accountable plan. Reimburse yourself for the expenses that you are paying for personally, because this is how we implement tax strategies that will help us create businesses that we love. I want each and every one of you to run healthy, sustainable, profitable businesses. And every single one of you should be taking home a paycheck as a reasonable salary through reimbursements and then draws, because this is what helps every single one of us step into our power as business owners and fall in love with our business year over year. All right, don't forget to hit like and subscribe. We are covering an entire hiring series next. So if hiring is part of your growth strategy this year, don't forget to tune in and take advantage of this important strategy. I have a favor to ask. If you have gotten any value from this show and you want the show to continue to grow and keep providing you with strategies for financial growth and efficiency, simply leave us a rating and review if you're listening on Apple or Spotify. Those reviews really go a long way in attracting more listeners, and honestly, they really make my day. So if you're feeling up to it, we'd love to see a rating and review from you. Either way, thanks so much for listening to the show.